Hi, my name is Matt Moklestad. I'm a lead advisor here at Foster Group, and this is our March 13th Financial Perspectives video. And I'm here with our Director of Institutional and Senior Lead Advisor, Geoff Christy. Really good to have you, Geoff.
Thanks, Matt.
How you doing?
To be here. I'm doing great.
Good.
How about you?
I'm doing well.
Good.
Geoff, just to start, can you tell us a little bit about your role here at Foster Group?
Yeah, absolutely. So I'm responsible for our institutional business here at Foster Group, which includes managing money for endowments and foundations, as well as employer-sponsored retirement plan business.
Awesome. So we work with both plan sponsors or business owners and participants, and this whole retirement plan landscape is pretty broad. So can you just tell us a little bit, why is this topic of retirement plans just so important?
Well, the landscape for retirement savings has changed a lot in the last 30, 40 years. You know, if you go back to the early 70s, most people, when they thought about retirement, they could rely on a combination of Social Security and, for a lot of people, a pension plan, defined benefit plan, where when they would retire, work for a company for 20, 30, 40 years, retire, and they'd get a benefit. And so the concept of actually saving on their own for retirement wasn't really that important. You know, they could put in their time with their employer, they would retire, and they would be taken care of. But that really shifted, later in the 70s into the 80s, where defined contribution plans, specifically 401k plans, became much more prevalent. So that burden of where the money would come from in retirement really shifted from the employer to the employees.
Got it. So quite a bit of change over the last number of decades. Yeah. So what are the most common types of retirement plans? You mentioned 401k. I'm assuming maybe there's some more, and it can be a little confusing, but what are the most common?
Yeah. I mean, there are a lot of different plans that are out there, but I would say for employers, 401k plans, for nonprofit organizations, 403b plans, profit sharing plans, which can kind of be coupled with the 401k plans, cash balance plans have become much more prevalent. But I would say, the vast majority of folks out there, a 401k plan is probably what they have access to.
Okay. So when you think about a 401k plan, we mentioned there's a plan sponsor, the business owner, and then the participants or the employees. What are some of the most common types of questions we're getting from employees today?
Yeah, the key thing from employees, they want to know, how much should I be saving into my 401k plan? And then probably the next question that they always ask is, where should I invest that money?
Sure.
Most people out there aren't in the financial services industry, and so they don't spend every day in it like you and I do. Mm-hmm. And so they're looking for assistance on those things, to try to figure out what's the right path for them.
Okay, great. Yeah, very, very common questions. So that's the employee side, right? So from the business owner, we also help administer plans for business owners or plan sponsors. What are some of those common questions we're getting from that side?
Yeah, usually when I get a call from a business owner, the first thing they ask is, I want to know if I'm doing the right things from a fiduciary perspective. Are the things that we're doing protecting us legally and what we're offering for our employees? And then the second piece of it is, how can you help my employees, or how do I know as a business owner if I'm providing adequate education around the 401k plan for my employees? And probably the third one is what I'm paying for my 401k plan, is that fair and reasonable for what it is that we have for our program? Those are kind of the key things that we hear just about every time we talk to a business owner.
Great. So those are great questions. And to sum up our conversation here today, is there any action you'd suggest people make, whether they're a plan sponsor, business owner, or an employee? Any thoughts there, Geoff?
I think for the business owner, it's really important. You have a fiduciary responsibility as a plan sponsor to review that plan every few years. And I talk to a lot of business owners, when we have these conversations and I start to ask them about their plan, and I'll ask them, when's the last time you really did a deep dive review of your plan? A lot of them, the answer is, gosh, I haven't really done a whole lot of due diligence on that plan since we set it up a number of years ago. So that's the first one, is just something that Foster Group can help with, is let's help you take a deep dive and just see, what's the design of the plan that you set up? Does that still meeting your objectives for both you as the business owner and for your employees? Are those fees that you're paying fair and reasonable? It can be somewhat difficult to sort of decipher what it is that you're paying for the services that you're getting. Yeah. The financial services industry has been very good at making things more complex than they often need to be. And so we can help plan sponsors, employers sort of wade through all that information to see, there's really kind of three key things when you look at the expense piece.
I was just going to ask about that.
Yeah, what are they paying for the investments that are offered in the plan, and that's often the expense that's actually that expense is borne by the participants. But then also, what are they paying for their record keeping services or their TPA services? And then thirdly, what are they paying for an investment advisor like a foster group to assist both the plan sponsor with their fiduciary responsibilities as well as the participants in helping them with their education piece. So we can help them kind of take a look at all three areas and the cost for those, and then benchmark how does that look versus what the market looks like for a plan of their size.
Got it. So a few different layers there, which makes it really important just to stay on top of.
Yeah, absolutely.
So any action you suggest for the employee or participant of a plan, things to think about there?
Those two key things that we talked about earlier, which was, how much should I save? Sure. And then where should I invest? Those are absolutely questions that's where we start with people when we provide our one-on-one consultations for individuals who are 401k participants of our clients. And, the how much should I save? There's not an exact answer to that. I mean, certainly it's an individual question.
You wish there was.
Yeah.
Make it a lot easier.
It would make it a lot easier. There's certainly some general rules of thumb that we share with people. And again, this is very general, but, in general, we try to get people to target around 10% of their savings. Now, if you're a lot closer to retirement, you may need to be saving more. If you have a longer, time horizon, you may not need to save that much. But it also connects with, making sure that they understand what is the match from their employer and factoring that in, and really making sure that whatever it is that they're saving, that they're maxing out what the employer is contributing to them to try to get them to that, 8 to 10%. But we can do additional calculations with employees, once we understand what assets do they have saved for retirement, what do they might have saved outside of the 401k plan, and then help them hone in on what makes sense for them as far as how much to save and what fits within their budget. The second piece of it, where should I invest? There are a lot of tools to help people figure out how to have an investment, kind of the do it for me approach. Not a lot of people, I would say fewer and fewer people, are wanting to really dig into the investment information and make a decision on their own about which funds to use and how much to allocate to each one of those funds. And so, there are either target date funds, which many people have heard of, which it's an asset allocation tool where a person really just has to look at, what is my time horizon to retirement, and selecting a fund, a target date fund that fits with approximately when their targeted retirement date would be. And that fund will automatically mix their allocation between stocks and bonds in a way that's appropriate for their age. And then there are also in a lot of plans what are called model portfolios, which again, that's a way for a person to not have to pick the investments on their own, and it will mix between stocks and bonds depending on what their own personal risk tolerance is. So for those investors who are more aggressive, they can select something that's 80% stocks or 100% stocks. Somebody who has less risk tolerance, they may want to go more with something that has only 20% stocks or 40% stocks. So there are definitely options available for people to help them not have to dive in and really do a lot of the analysis and figure out what funds to pick.
So it sounds like there could be kind of a more do it for me, target dates, models, or I'll do it myself. And you pick from the range of different fund options.
Yes, exactly. Yep.
Great. And when you're talking about questions that employees are asking, it sounds like, as always, as we like to talk about, every individual is different. They have their own goals, their own tax situation, financial situation. So it's really important that they just think through that when they make those decisions. And we help do that. And also, Geoff helps lead our institutional team. We have a lot of individual advisors that are working with individuals and families. And those are really the types of questions that they're helping answer is, am I on track for retirement? Am I doing the right things to feel confident? So thanks so much for your time today, Geoff. That was great.
Yeah, absolutely.
Awesome. Well, any questions you might have, please let us know. Thanks for tuning in this week.